Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Urmas Patakia. We started off a little choppy today actually. We recovered from the lows, but the high today was 25,981, so close to 26,000 yet so far. And that has been the trend, right? But of course, after that stellar rally that we saw yesterday, it was something which was expected as well. For now, the Nifty is up 15 points, quite choppy. The mid caps, they are doing well. So 106 points higher on the mid caps right now. Bank Nifty that did really well yesterday has come in for some profit booking. So that's where we are seeing cuts of around 100 points right now. But yes, this is not something to worry about after the rally that we saw yesterday, though we have seen a lot of central bank action coming by in the Asian markets as well, China as well. Dow posted a record high yesterday yet again. So the expectation was maybe we could mirror that again, and maybe today could be the day for 26,000, but that hasn't happened. Maybe some sort of pullback, some sort of choppiness is something we can expect.
It never happens in one go, isn't it, for the Nifty? It will always come closer to those levels, it will tease, and then eventually a few days later it will cross that mark, still 40-50 points away from that mark of 26,000. It will take 38 sessions if it does happen today. But of course, it is the Nifty Bank that is the main catalyst for this up moves that we have seen on the Nifty. The last 8 sessions that the Nifty Bank has moved higher, it's been up 3,000 points. From those levels of around 51,000, we tested 54,200 on the upside yesterday. So it is the Nifty Bank that will be the one to watch out for today as well, because it's the financial services expiry. So we'll see if this moves in the second half of the session as well. So we'll keep an eye out on that. Of course, what's doing well today are the metal names. Of course, the metals index is the top sectoral gainer by a distance with all those stimulus measures that have been announced in China. The Nifty Metals Index and every single constituent of the Nifty Metal Index doing well today, be it NMDC, be it Nalco, SAIL, Vedanta, Tata Steel, all of them are doing very well in today's trading session. Tata Steel among the top gainers on the Nifty as well today. NMDC is up 4% and as is SAIL. So overall, good going for the broader markets. The benchmarks though are still in a neither here nor there sort of a zone.
Oh yeah, so broader markets, they continue to be doing well. And if we talk about certain names, Sapphire, for instance, that stock is up 12% right now. We have ASIC Kelkar, that stock is up around 10%. So some of these pockets which tend to do really well. But it's time to talk about market fundamentals. So Unmesh Sharma from HDFC Securities is joining us now. Unmesh, good morning. Thank you so much for joining in today. Well, you know, we've seen a lot of central bank action that has come by. We saw it with Fed. Now, in China as well, there's an indication that could happen. What are these trends suggesting, and what would this mean for the Indian markets?
So, good morning. So globally what started to happen is that while there seems to be some kind of stimulus on both sides, the reasons are very different. In the case of the Fed, you know, clearly we were at the peak of the cycle. I think that was indicated very well across the commentary from the Fed in the policy documents as well as outside in forums like Jackson Hole. China, on the other hand, is facing a completely different issue, which is that there has been a significant slowdown in the economy and there is balance sheet stress there. So, you know, as we have seen in the past couple of cycles as well, the way in which the Chinese government reacts to that is to pump liquidity into the system and keeps the lending environment very benign, because unlike Fed or India, where the transmission of policy happens through the banking system, there even individual lending at the individual asset level to a large extent is centrally controlled. So, you know, different reasons where I think in the case of Fed, I think they seem to be indicating that the fight against inflation is broadly under control. While in this case, it is a little bit more of pump priming an economy which clearly looks under stress.
Unmesh, good morning. Thank you for joining in. And what does all of this China factor does to a sector like metals, because it has been relying on these measures from China? The stocks are moving higher now that there is expectation that there will be stimulus announced. But do you always prefer metals to be a tactical play, because there will always be some headwind or the other that emerges for a sector like that?
I think, look, you know, the long-term structural trend on metals, and, you know, you would have seen that in all resources, including oil, is the fact that despite having so much turmoil in globally with the two wars, you know, both in the Middle East as well as in Europe, is that metal prices actually haven't spiked so much. And while there are other reasons for this, I think one very large reason has been that China, which has been in the last two large cycles, the big sink of all metals demand, if you aggregate it, in a lot of cases like copper or aluminum, they were basically absorbing 50% of global demand. Of course, that's an average, but I'm saying that in general, if the Chinese economy is not doing well globally, metals find it very difficult in that type of environment to go up, and that's true both for oil. Now, all of that is positive for India because we are a net consumer of these commodities as well. But broadly in China, I think what will happen is that we've seen this, in the past after the slowdown in the global credit crisis as well, is that in the short term, every time there is a stimulus from the Chinese government, there will be a spike in metals, but all of this is tactical. So the way to think about it is that there is a structural kind of bear or underperforming kind of metals basket in which there will be these bear market rallies, which will be timed as per the stimulus in the China, and that's how investors should tactically play this.
Okay, Unmesh, I was going through your note. The projected earnings growth for FY25 is 5.7% and for FY26 is 16.1%.
Yeah.
What is the reason for, what do you think would be the factors that would lead to this low single-digit growth, and what are the factors that would contribute to the growth we'll see in FY25? And what happens in FY26 that we'll see that 16% growth? Is it low base, or there are some fundamental changes that will come by?
Yeah, so look, I think what is happening is that what you're looking at is aggregate. The way in which investors broadly look at earnings growth to a large extent is, X of banks and X of, large resources which are global. So, if you try to bring it down to the earnings growth for the domestic economy, so as to speak, then that number actually is around 12-13%. And, so what happens is that if you X that, that is what you'll see. I think to a large extent, what is happening is that the base effect of the earnings has started to play through. We are a little bit now on what I would call steady state in terms of, real earnings growth of 6-7%, inflation of 4-5%, and then a slight multiplier on that. So while, yes, the headline number is 5 and, 16, it's really around broadly around 12%, which you will find each year X of the large swing factors, which is how investors would look at it.
What about this quarter then, Unmesh? It's just a week from now that companies start to report business updates, and then with the IT companies starting to report results as well for the quarter gone by. Is there a particular sector that you would want to watch out for in terms of the earnings performance this time around?
I think, to a large extent, I think if you look at the big sectoral change, if I may, because, I can go on for on 12 sectors, but I think the one single one which we are keeping an eye on, we really want to know what is happening in the rural economy. I think there is enough, commentary that things have started to improve after reaching a bottom. But I think that with now, by the time the results start to come out, will be the second week, first or second week of October. What we'll start to see is whether this, adequate rainfall in terms of temporal and spatial distribution has been adequate. Because I think to a large extent on the large consumer names where we have incrementally turned positive, this will be a key driver of earnings for the rest of the year. So, come October, I think we'll be listening carefully to these calls to understand whether indeed the rural economy turnaround is playing out or not. And the second big factor would be what happens on the large banks, because that will be a key determinant one on our calls of, a little bit more overweight on large private banks in terms of whether the rate cycle is impacting, how they will impact. And it feels like there is a convergence on the large deposit and credit growth. If that comes out, I think that will be a very interesting play. So large banks has been our call for this. The commentary will suggest whether we should continue to go more overweight. And, it's been a laggard, so whether that is the way forward or not.
All right. Okay, Unmesh, banks, they definitely will be the key to watch out for from here on. That is the sector to watch out. Thank you so much for joining in today with your take on the markets and the outlook going forward as well. We'll slip into a break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
Back with us here on Trading Hour. The Nifty continues to remain around that mark of 25,950 as we speak, and it is now recovering slightly off the highs of the day. 25,981 is the high that the index made earlier in the session. Good time to get in Mitesh Thakkar for a quick chart check. Mitesh, good morning. Thank you for joining in. Well, does 26,000 now pose as a barrier for the Nifty, at least for the time being, and couple that up with your stock recommendations as well?
So I think, to be honest, I think it's not the Nifty, but I think some profit movement on the Bank Nifty, and I think it doesn't look like a barrier. It just looks like an index which was extremely overbought during some kind of a pullback. But I think another 100 to 200 points lower, I think the Bank Nifty could yet present a fresh entry opportunity. So not negative in that sense, and still maintaining a positive bias. Today, I think is the metal and the realty pack which is doing very well. So I think maybe the focus should be there. I had some metal calls earlier in the day. Right now, I have a buy on Tata Power with a stop at 457.5 for targets of 480 and maybe even higher levels eventually. And also a buy on Oberoi Realty. That's a buy with a stop at about 1860 and a target of around 1970 can be looked at.
All right. Okay. Thank you so much, Mitesh, for joining in with those picks. With that, we'll slip into another break. When we come back, we'll talk more about stocks and specific market moves.
We've gone, since I've been here, we've gone from 6,000 employees here to 60,000. And they're across all things, data, scientists, engineering. We cover 150 companies in research and banking. 850 multinationals coming here, custody, asset management. We've just been growing with the country, and your country's been growing quite well. And I'm quite optimistic about the future of India.
Who are you supporting, if I can put it bluntly?
I'm not endorsing anyone at this time.
Okay.
I spend more of my time on policy. What's the policy we need that can really help both the world, that's foreign policy, and domestically? So I think we need to do a lot just in America to lift up our country, and as we do that, it helps the rest of the world.
Mr. Trump, in an interview he said is that he may tap you to be the Treasury Secretary, Mr. Diamond. I just wanted to ask you
this.
He
said like, the next day, definitely not. So I don't expect to be the Treasury Secretary.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. We spoke about markets, discussed market fundamentals as well. It's time to shift focus to the commodity space. Manisha is joining in today, and we're focusing on palm oil. Manisha, what's happening here?
Well, yes, there has been a lot of news on edible oil in the last couple of weeks, and that is because it's one of the essential commodities. We also saw government hike import duty by 20% for the crude and the refined edible oils, including palm as well, with an expectation that the international markets perhaps will come down and it would all work out well for the Indian farmers, consumers and the industry as well. Instead, what we have seen is that the international prices have continued to run up, and the latest reports suggest that Indian refiners, because of this, have cancelled nearly 100,000 tons of palm oil, which was anticipated to be coming into the country between October to December. Now, the duty hike and the global prices hiking has led to profit booking by many of these importers here. Palm oil prices globally have surged up above 4,000 Malaysian ringgit, and the prices are now trading at a 12-week highs, up nearly 7% on week. And that clearly doesn't work in sense of importing it with the kind of rise in prices that we have seen. Also, the strong EU demand, also ahead of the deforestation norms that take place in December 2024, has been another reason that you have seen the global palm oil prices continue to rise up. Well, the markets are also looking at very strong numbers coming in from Malaysia, where the exports have gained up by 9%. Indian markets will be looking at imports in any case going forward because this is festival season. As of now, there are enough and more supplies, but come the next month, which is October and November, you would be looking at imports. So overall, the feeling really is, or the context is, that you could be looking at higher edible oil prices in the last quarter of this year, which is also the festival season, by the way.
Manisha, thanks a lot for summarizing all things palm oil this morning. Thank you for that update. Shifting focus now to the new market debutants, and there were 3 of them today. Western Carriers, Arcade Developers and Northern Arc made their debut on the last street today. We start off with Western Carriers first up, this logistics player. It was a flat debut for them, and now the stock is trading below its IPO price. Manglam is joining in now with more on the company. Manglam.
Well, there are a couple of reasons why perhaps, it's been a flat listing and the stock is below its IPO price as well. They raised about 400 crore via fresh issue. The overall IPO was about 500 crore rupees. The total subscription was 30 times. Now, 30 times, is more than what was needed for the IPO to go through. But, it's a lot less than the recent 60, 70, 80, sometimes even 100 times subscription that we are seeing for IPO itself. It is India's largest private multimodal rail-focused 4PL asset-light logistics company. It's got volume shares of 6 and 2% for both domestic and EXIM businesses, respectively. They will pay about 163 crore of debt via IPO, and 151 crore would be deployed towards capex itself, for which the revenue CAGR over the last 3 years has been just a paltry 4.65%. Metals account for 53% of their revenue, FMCG and pharma the remaining for the company as well. Even if you look at the throughput volumes, from FY22 of 2.16 lakh TEUs, it's actually fallen to 2.12 lakh over the last couple of years. And a couple of things that stand out in their financials, even as the revenue has grown about 4.65%, margins have improved from 7% to closer to 8.7%. We've seen the debt for the company increase from 150 crores to 265 crores. And the EBITDA jump actually hasn't reflected in their cash flow from operations. So, cash flow from operations have decreased from 31 crores to about 22 crores. And on the other hand, the receivables for the company have increased from 59 crore to 136 crores. So until there is some improvement in their balance sheet going forward, there is some growth, etc., the street will perhaps back something like this. Maybe they would wait for some sort of growth to return and improvement in their balance sheet to come by as well.
That explains the muted debut that we've seen on this name. Thank you so much, Mangalam, for putting things into perspective. That's about Western carriers. On the other hand, we had good listings, 2 of them. Let me start with the Mumbai-based realty player Arcade Developers. It saw strong listing. In fact, the stock listed at 38% premium to its issue price. Right now, it's seeing gains of around 35%, and that was expected because the subscription was very strong. It was the highest subscribed IPO in the real estate sector in the last 5 years. And it was totally subscribed at 106.19 times. So there was a lot of interest, and that is something which can be seen in the stock price as well. Now, the promoter holding before the issue was 80.17%. Post listing, it will come down to 63.33%. The company will be using these proceeds to develop ongoing and upcoming projects, general corporate purposes, and also funding of future real estate projects. Now, remember, the company is both into redevelopment and development of newer projects. And remember, redevelopment has been a big opportunity that we are seeing for Mumbai-based players, and this company is expanding into that. The company, as I said, it's a Mumbai-based real estate player, and that is where they're expanding. If you look at the financials, the operating performance that the company has done in last couple of years, volumes have improved to 0.19 million square feet, collections have improved to 258 crore rupees, which compares with 170 crore rupees in the previous year. Sales in units have substantially jumped to 258 units. This compares with 87 units in FY22 itself. Now, what really worked for this company or this subscription this time around, or this IPO? One, redevelopment is something that the street liked. It is a big opportunity. Second, the valuations. If we talk about the FY24 NAV, which is the net asset value, that is how we look at these particular real estate companies. This was the lowest that we've seen across the other Mumbai-based real estate players. Arcade Developers at 21 rupees, Keystone at 157 rupees, Godrej Properties, that is in a world of its own, at 359 rupees, Macrotech at 180 rupees, and we have Suraj Estates at 148 rupees. So the valuation upside was a lot here. The redevelopment opportunity was a lot here, and that is what the street seemed to like. Yes, there are some risks with respect to cost of materials, the vendors not being the same for every project. But yes, looks like this is something that the street likes. And let's see whether the execution is as per the street's expectations.
Always the key, right? Execution. It's showing up in the price as well. The best performing stock among the 3 listings today is Arcade Developers, 35% higher currently at 173. The IPO price, 128. And the third one on the list today was, of course, Northern Arc Capital, and that too listed at a 25% premium to its IPO price. They are trading with gains of around 21% as of now as well. So holding on to those listing gains, and as Mangalam was highlighting, right, that 30 times subscription, what otherwise on paper looks very healthy, is not the kind of subscription that you've seen through the year in most of these IPOs, and even this one was subscribed almost 118 times, and even then it's listed at a 25% premium. Now this company is it raised around 500 crores through a fresh issue of shares, and it is a non-deposit taking NBFC, and it's been operational for over a decade now, and it is operating in sectors across various sectors and geographies. Now we spoke to the management also earlier in the day, and they mentioned that they are expecting to see an improvement in margins going forward, and that has been one of the key concerns as well for most of these NBFCs and for banks as well. So they are expecting an improvement there, and 40% of the company's core business is focused on MSMEs. So it is an MSME focused company there, and the balance sheet has grown at a pace of around 31%. So it'll be interesting to see if they maintain that pace of balance sheet growth going forward as well, and that is something that the street would watch out for going forward as well.
Okay, all right. So that is Northern Arc Capital. We have those 3 listings that we wanted to talk about, but with that we'll do one thing. We'll slip into a short break. Up next we'll be joined by Gokul Hariharan of JP Morgan. Stay tuned for that conversation.
Welcome back, and on to a CNBC-TV18 exclusive. Then Jamie Dimon, the chairman and CEO of JP Morgan Chase, spoke to us about the US elections, the possibility of higher tariffs under Donald Trump, and a lot more. Listen into excerpts from that conversation.
Not endorsing anyone at this time.
Okay.
I spend more of my time on policy. What's the policy we need that can really help both the world, that's foreign policy, and domestically? And I would have a negative income tax. I would have better permitting. I'd reduce certain regulations. I would love schools to judge themselves on when the kids, high schools and community college, when they graduate, what kind of job do they get? You know, and so you're focusing on the outcome, not just, you know, the input. And so I think there are a lot of things to do to make America healthier and to lift up all of our citizens. I think we've, you know, if you look at the data, we've left behind the bottom 20%. You know, we should focus on that. That is a legitimate thing for government to say, why is that? They're also dying younger, their schools are worse, they have more crime in the neighborhoods. And that's kind of why you have populism. And so I think, you know, we need to do a lot just in America to lift up our country, and as we do that, it helps the rest of the world.
I mean, there's been a talk that if Mr. Trump, and in an interview he said this, that he may tap you to be the Treasury Secretary, Mr. Dimon. I just wanted to ask you this.
He said like, the next day, definitely not. So I don't expect to be the Treasury Secretary.
Well, there's Mr. Musk, who's also been sort of, you know, he said openly that, well, I'd love to be part of a Trump administration. Yeah. I just wanted...
Okay, so Elon, this idea about having an efficiency commission, I actually like the idea. I mean, I think governments have to become more efficient, more competent, and look at, you know, when they take money, what do they get for it? And I actually think it's a very good idea. It's kind of like, remember Al Gore had the reinventing government? We really need to do it. I mean, in America, we need to do it. I'm sure a lot of other countries need to do the same thing.
Right. Do you think under a Trump presidency, I mean, one of the big things which we all talk about, and he said many times, is tariffs essentially go up all the way, quite a bit, especially with China, but matching tariffs for all trading partners. Do you think that's a likely scenario?
I don't know the answer to that. I've spoken to some of his top advisors, and actually I was in D.C. last week, and they say, yeah, it's more of a negotiating tactic than an expected outcome. Remember, they did negotiate USMCA. They did negotiate with China, you know, a couple whole trade agreement with China. So yeah, I think the tactic would be rolled out. I would prefer we just end up with better trade deals.
Mr. Dimon, a quick last word about what your plans are. I mean, that's the other bit which, I mean, you're one of the last rock star bankers, if I can put it that way. And I'm not exaggerating. I just wanted to ask you that.
I'm getting old, basically. I love my job. I literally love doing it. I can help our employees and our clients, and I think it lifts up countries. And, you know, we finance schools and states and hospitals and governments and big companies and small companies. And then we have policies to lift up part of society that needs a little bit of help. I love it. And, you know, eventually I'll leave. You know, we've got great successors. We've got built-in successors. If you ask the analyst community, they can point 4 or 5 people they think are quite capable. And so sometime down the road, you know, some of those people move up, and maybe I'll go to chairman for a while, something like that. And
you can catch the full show and conversation with Jamie Dimon at 5:30 p.m. today. But before we get into a break, let's quickly take a look at the markets because they've come up from the highs sharply. The Nifty is in the red. It's a 13-point downtick that we are seeing there. Mid-caps too, which were surging, they have come up from the highs absolutely flat with some positive bias though. And if we talk about the names which have led to this fall from the highs, we do have some of these banking names. IndusInd Bank, for instance, is at the lows of the day. We also have some of these consumption names which are contributing to the losses. HUL, for instance, is at the day's low. We have Asian Paints, Reliance Industries is the other one. ITC is one of them. And these are some of the names which are at the day's low, contributing to the fall that we are seeing on the Nifty from the highs of the day. So we'll keep tracking markets for you, but we have to take a short break. Up next, we'll be joined by Gokul Hariharan of JP Morgan. We'll discuss a lot of things from AI to tech to semiconductors. Stay tuned for that interesting conversation. Welcome back. You're still tuned into Trading Hour, and it's time to talk all about AI, technology, semiconductors, and a lot more. In fact, in recent news, India and the US have tied up for setting up a chip manufacturing plant in India. And the other talking point is, of course, the ever-expanding artificial intelligence landscape. Let's get in Gokul Hariharan, co-head of APAC TMT Research at JP Morgan, coming in and joining in from the sidelines of the JP Morgan India Investor Summit. Mr. Hariharan, good morning. Thank you so much for joining in today. You did have an interesting Asian tech tour. You met 40 companies on the tour, and the takeaways have been quite interesting as well. Something that stood out for you, how we are seeing demand when it comes to semiconductor, the chip supply issues, if they are getting over very soon, and how are investors perceiving that big boom that we are seeing in artificial intelligence?
Yeah, good morning and thanks for having me on. So I think the technology industry is going through a pretty interesting cycle. We're essentially getting a K-shaped recovery here. Everything AI related is booming. We've had this boom since 2023 and it's continuing to go. There's obviously some questions about whether we are kind of at the peak of this. We don't think so. There is still pretty strong growth coming through from heavy investments in foundational large language models developed by a lot of the cloud services providers. There is also incremental demand coming through from sovereign AI, countries such as India and other countries also developing their own AI. So AI clearly remains an important driver for growth for semiconductors in the next 2 to 3 years. We think that this is likely to last for another 2 to 3 years. At the same time, a lot of the areas where we saw a lot of incremental demand during the pandemic period in 2020 and 2021, including a lot of the older generation chips and associated products, they have been in a bit of a post-pandemic funk. So we're still going through a little bit of a correction in those segments. They're still kind of bouncing along the bottom, which is why I said it was a K-shaped recovery. We're kind of seeing a little bit of a light at the end of the tunnel for that segment. So that should probably start to come back up in 2025. That would contribute to the stronger growth for semiconductors in 25 and 26. Lastly, I think as Gen AI becomes more broad-based and we see a wider adoption, we will start to see a lot of Gen AI applications start to come on to the edge devices or the devices that you and I use, smartphones, PCs, etc. Apple already talked about Apple Intelligence coming through with the iPhone 16 products, and we'll see a lot of other manufacturers also bring these functions to devices, which will be potentially the next leg of driver or next growth driver for semiconductors as it pertains to AI.
Mr. Hariharan, good morning. Thank you so much for joining in. I'd like to go on to that semiconductor push that India is currently having and the announcements that were made on the Prime Minister's tour to the United States. Do you see that? Of course, it is a long gestation period, right, for a semiconductor unit to come around and then production begins and all of that. But do you see this move as the first step for India to become that semiconductor manufacturing hub that it aspires to be?
Yeah, I think very interesting times here. I think I've covered semis for 20 years. The first time that we're starting to see something really happen back home in India, so that's very exciting. I think India is going about it in the right way, I would say. There are probably 2 or 3 things which are fundamental. First, I think the government policy seems to be pretty consistent and also very realistic at the same time, not really trying to do very advanced semiconductors, which only very few companies in the world do, trying to start at more manageable kind of aspirations. Second, I think the companies that are starting to invest in India, we are starting to see big companies, Micron and a few other global companies invest. Also, some of the bigger conglomerates in India, Tata Group and others, are also starting to invest. So there is support from local biggies as well as MNCs for this push. And third is the external factor, right? I think the whole world is looking at some degree of supply chain diversification. People want a China plus one or a greater China plus one kind of supply strategy, and that's kind of come into sharp focus. A lot of countries are trying to find that next destination. I think India clearly has a role to play as a potential destination there. Now, I think if you look at the semiconductor ecosystem itself, there are various parts to that ecosystem. India is kind of starting to take some baby steps, largely in the assembly and packaging, or packaging of chips, you could say. That's probably the right place to start because A, it is labor intensive, which kind of caters to the lower cost skill labor available in India. Secondly, the entry barrier in terms of technology and IP is not that steep, so new companies can actually come on to this pretty quickly. It's still a smaller part of the value chain, but that's probably a good start. Now, if you look forward a little bit, I think the 2 areas which are the higher value adding parts of the supply chain, one is design, chip design itself. That's where American companies like Qualcomm and NVIDIA basically lead the market. India has actually the largest, or one of the largest pool of design talent, chip design talent domestically, roughly about 300,000 people working on chip design. Only thing is that it has not really coalesced into something that could be a homegrown company. There are a few interesting startups coming up in the chip design space, in analog chips, mixed signal, IoT, etc. But that's still a very early step. But if that can start to crystallize, that's going to be quite powerful. The second part, obviously, is the holy grail, which is the wafer fabrication, or the fab, as people call it. That's quite difficult. India is already announced maybe 1 or 2 fabs. I think Tata Group has announced one. There are a couple of others also that have been announced. That's going to be a little bit more of a longer journey, as you suggested. It's probably going to take 5 to 7 years. And you have to start at more mature kind of technologies, not go directly to extremely leading edge technologies. I think India is doing the right things. I think if you look at some of the new fabs that have been announced, they're mostly focusing on mature technologies. They're also bringing in partners who already have experience working on these technologies for many years. So that's, I think, the right approach. But this is something where consistent policy would be required, which I think the government seems to be pretty committed to do. And it will take time. It's not going to have a quick result. It's probably going to take 5 to 7 years. That is required for the ecosystem to kind of clearly get established, have some kind of a critical mass, and then that kind of starts to feed on itself. Now, just as an aside, I think TSMC is a company that I follow. They are kind of like the market leader in terms of technology prowess today. But if you look back 35 years back or 37 years back when they started, they also started with N-3 or 3 generations or 4 generations older process technology compared to what was the state of the art at that point in time. So you have to start usually a little bit behind, but over a period of time, once that momentum comes through, I think you can kind of start advancing. So it's a great start, and I think there is clearly a lot of momentum. We saw this in our a couple of the presentations that we had in the India Investor Summit as well, that the momentum is clearly there, both from the policymakers as well as from the big companies.
Okay, all right, Mr. Hariharan, such a pleasure speaking with you. We had a lot more questions, but we have run out of time. But that's an interesting take. Of course, exciting times ahead for the semiconductor industry in India and globally as well. That's the word coming in from JP Morgan on everything AI, tech and semiconductors. But we have to move on and talk about some stock-specific action. Nomura has issued a bullish note on IPCA Labs, raised the target price as well. It estimates a compounded growth of around 30% over the next few financial years. Ekta is joining us with more details on this. Ekta.
Thanks for that. Well, yes, Nomura has written on IPCA Labs. They have a buy. They've raised their target price to 1,750 odd rupees. They have a positive view on the stock based on factors such as the consistent outperformance in the domestic formulations market. Business, according to them, which is the domestic business, attracts higher valuation multiples and believe it will contribute 50% of the FY 26-27 EBITDA. There is scope for improvement in other business segments in the near to medium term, particularly in generics as well as the API segment, and cost and revenue synergies at their subsidiary Unichem. They estimate a 30% earnings CAGR over FY 25 to 27. The estimate growth momentum may remain strong post FY 27 as well. They expect the EBITDA margin to reach 25 to 26% over time versus estimates of 23.6% in FY 27.
Ekta, thanks a lot for that. IPCA Labs slightly off the highs of the day, but trying to hold on to gains of around 1.25% as of now at 1475. Time for a short break. Up next, we get chatting with the management of Cosmo First to get an understanding of their current demand trends. Stay tuned. Back on the other side. Welcome back onto Corporate Conversations then, and the management of Cosmo First is joining in right now to talk about what are the demand trends looking like for this quarter and for the rest of the year as well. We are being joined by Group CEO Pankaj Poddar to discuss more on this and the outlook going forward as well. Mr. Poddar, good morning. Thank you so much for joining in. We are almost coming to the end of the second quarter. How has business looked like this time around? Not to ask you for specific numbers, but has this quarter been better than the first quarter that you had? And of course, part two of my question being, have your spreads across your various film lines improved as well?
Yeah, so this quarter is looking better for multiple reasons. First, the good news is that raw material prices and oil prices are coming down, which is always very good for the industry because it brings down the working capital and also makes films cheaper versus other substitutes. Demand is growing well, and therefore the margins are also looking healthy both for BOPP and BOPET. The specialty is also growing nicely for us. BOPP is now clocking 70% plus month over month. BOPET specialty also has started doing 20% plus. And then all the new businesses that we have started are also tracking well for us. Chemical business is now making a monthly EBITDA of close to 3 crore and a monthly sale of close to 15-16 crore. Similarly, plastic is now touching a run rate of close to 4 to 5 CR per month, and it looks like that plastic business will also start making EBITDA positive from quarter 4 of this year. And similarly, Cosmo Sunshield, the trials are going very well, and we expect to commercially launch this product within next 2 quarters. Coming to Ziggly, which is our pet care business, that business also we have been cutting down our losses, and now we are back in a mode of growth. So we have now 25 centers, and both our online and offline is growing. We have significantly reduced our losses by close to 40% on that business, and we are tracking very well from a growth perspective. There is a month-on-growth of close to 6-7% in that business.
Okay, so Mr. Poddar, you've given us an overview of the entire business. Now we have to get specific. Quarter 1, you did indicate that realizations have improved, and that is something that has happened in quarter 2 as well. Realizations on an average, including specialty films, was around 35 to 36 rupees per kg. Can you give us a sense of whether it has moved up from those levels in quarter 2 and by how much? And is this a trend which is expected to continue? Because so far we were talking about supply-demand mismatch. Has that started moving in the positive direction across the industry?
Yes, so see, margins are going up, though for Cosmo, much more important is our specialty growth, where, as I said earlier, that BOPP is now 70% plus and BOPET is 20% plus. But in general, yes, this quarter margins are better than the last quarter, and demand continues to grow for this industry. There's a better stability in the exports market as well, whether we talk about America or Europe. So in general, things are good. But then obviously, you always have some more capacities coming up, in the times ahead. And that temporarily impacts the margins, and then you again have. So we have to, kind of acknowledge that this industry, especially the film one, is a cyclical industry, and one of our key targets is to take out Cosmo completely out of this cyclicality over a period of time, and that is the reason we have been focusing so much on specialty business. So BOPP now we are close to 70% of our volumes into specialty, and BOPET also the tracking is going nicely.
So how much have those margins improved by? If you can give us a ballpark number, 10%, 20%, and is this a sustainable trend?
Yes, so see margins.
Specialty bit.
Yeah, specialty for sure. I have in the past indicated that they tend to stay, 2 to 4 times of commodity margins. And, if you see a long-term average, they are normally 2.5 times of commodity margins, because commodity margins keep changing while specialty margins are far more stable. So given that we have started tracking, last year we were tracking at close to 60%. And this year we are now, if we talk about first 6 months, we're tracking close to 67, 68%. And last couple of months, we are tracking 70% plus. So these things will certainly help improving our margins. They are showing in our profitability trends as well. And that is a key focus for the company.
Mr. Poddar, you mentioned bringing Cosmo out of the cyclicality in the near future. Is there a timeline that you have set that this is by when you want to do that? And also your CPP line, is that on track to be commissioned by the third quarter this year? And how much would the initial revenue contribution be in this financial year itself?
Yes, so see, given the fact that we're bringing more capacity even on BOPP next year, so these percentages will look lesser once the new line comes up, though the absolute volume numbers are continuously going up. We had targeted that we will touch 80% because taking it beyond 80% becomes very difficult because of the fact that you have some customers. So we are tracking well. This year end itself, we should be 75% on BOPP and 25% on BOPET. And, other than the fact that new volumes would come up, on the past volumes, we should be moving to 80% next year itself. Coming to your second question in terms of, sorry, can you repeat your second question?
That's the CPP line, Mr. Poddar.
Yeah. So the CPP line has been commercialized already, and obviously it will take us some time to fill this capacity. CPP will help us make the structures for brands more sustainable, more cyclable, and recyclable as such. And the initial traction is good. We are working a lot of big FMCG brands to give them more sustainable structures. And, we are happy with the initial progress that we have made, and it will continue to happen in the near future as well.
Okay, so if not at the full, of course, you wouldn't be able to get the full capacity utilization this time around. By end of this year, what kind of revenue addition would you see from the CPP line itself? And the second part of the question is the cost-saving initiatives that you've taken, the renewable power and Korea plant moving to India to cut costs. Has that already started flowing to your bottom line, the cost savings that you've spoken about earlier?
Yeah, so the Korea one has already started flowing because there's close to $1 million saving coming because of that reason itself, because we have shifted the production. Similarly, renewable power also, some part of it is already done. We are hovering between 40 to 50% of our total power requirement coming from renewables, and a couple of more agreements are in the pipeline. We are expecting that in a year's time, we should be drawing 70% of our power from renewable, which is one side make us more sustainable, and on the other side, it also gives us cost reduction. And given the fact that our demand is so much stable, we can certainly afford to have a very high percentage of sustainable power and renewable power in our portfolio.
All right, Mr. Poddar, thank you so much for sparing time and joining us to talk about your road ahead for the remaining quarters of FY25. That was the management of Cosmo First speaking to us on the road ahead. By the way, the Nifty continues to hover around that mark of 25,900, but the metals index has come off the highs of the day now. At one point was up almost 2.5%. Now it's below that 2% mark. Almost 0.8% down from the highs of the day is the metals index. HDFC Bank is also another one that has come off the highs of the day. 1794 is that level on HDFC Bank that you need to track for the record high for the stock. It made a high of around 1780 this morning, and it has come off those levels as well, almost 1% off the highs of the day. But with that, it's a wrap on this edition of Trading Hour from Sonal, me and the team that put this show together. Thank you so much for watching. Halftime report comes up next.